To add a corporation to your projections, you can click the Add Corporation button up at the top here. You may be prompted to upgrade to the Advisor Business Plan if you don't yet subscribe to it. I'm adding Corporation ABC with the province of Ontario, and we'll keep the defaults for the small business deduction. Now, we have some balances that we can add a starting amount to. So for the refundable dividend tax on hand balances, capital dividend account balance. Here I'll add $25,000 for the CDA for Justin. You have the option to provide an automatic dividend threshold. So once the balance reaches a certain amount, you can enter a value here to pay that out. We have the ability to enter information for the GRIP and then the ownership. So if you don't know these notional accounts, that's okay. You're just going to have a more conservative projection with the zeros as the starting balances, and Snap will track the amounts going forward. How will the corporation be disposed of? Will there be distributions through dividends, which is the winding up or the default method? Or would you like to assume that there'll be a capital gain based on the share sale method? Snap will use the ACB entered for the share sale method. You can also select when to dispose of the corporation, with postmortem being the default. If you are adding insurance to a corporation, you're going to need to select the winding up method. Next, we'll go to the assets page. Here, we're going to add a financial asset, just like we do on the personal side. And the investment here is $100,000 with an initial cost of $50,000. It's invested with 40% fixed income and 60% equity. You also have the option to add real assets, multiple investments. The debts can be added as well. And then we also have an insurance option. Let's add a whole life policy. And the type here can be selected as whole life or universal life. We're selecting Justin as the insured. And in order to edit the death benefit and the annual premium, we just need to open up this pop-up window. We can type in information, or we can copy and paste from an insurance quote, perhaps from the insurance company or something that you already have in Excel. I have the corporation as the beneficiary, and then we'll be able to move directly onto the planning page for the corporation. So before we make any changes here, let's take a look at what's happening. We have the investments with some automatic withdrawals. These withdrawals are happening to cover both the insurance premium and the total taxes each year. So similar to the personal planning page, I can click on buttons at the top of columns in order to see extra details. Let's go ahead and add some information about the active business income. So Justin's company is bringing in $250,000 a year. I can index that and copy it until his retirement. His salary is $100,000, also indexed and copied until he retires. And he has some expenses in the corporation of $75,000 a year, also copied down, we'll copy to his retirement as well and index those. Once I make changes on the planning page, I do need to run the corporation. It's turned red to indicate that updates were needed. And Snap automatically calculates for me what the net operating income is and the taxable operating income. And this is representing the OpCo part of the projections. To the right, it's more of the HoldCo. So here we have passive investment income. And Snap will determine if there's more than $50,000 of passive investment income, the small business deduction will be reduced accordingly for the active business income. So here we have the taxable investment income that's coming in based on the investments, the total taxes, and now instead of withdrawals happening from the investment account, we actually have surplus cash that is being saved into the HoldCo here. We have the insurance information, and then we have the dividend columns. So we can pay out dividends to Justin using these columns. Capital dividends, for example, I can set up right from the beginning of the plan if I wish. And this is going to be limited by what the available balance is in the capital dividend account. So up on the balances I can track those balances over time. So here's my CDA balance, my GRIP balance, which will limit my eligible dividend payouts. And I can also see the RDTOH balances here. At retirement, we're going to enter some non-eligible dividends. We'll start with $40,000 a year, and we'll index that and copy it down to age 100, and then run the corporation. So as we scroll down to the bottom, we can see if there is money left in the corporation. And at the end of the plan, we have the net worth of the corporation, which any given year I can click on to see more details. So the net worth is the total of the financial and real assets, plus the insurance CSV. The after-tax estate or the market value for the corporation, if I click that value, I have more details. Because we selected the winding up method, I can see the disposition of the corporation through capital dividends, eligible dividends, and non-eligible dividends. Then we come back to Justin's planning page. There's a couple things that we need to do here. Because originally we'd set up his income as personal income, we need to just go back to his income page, and we're just going to delete that income. Because once we look at it on the planning page, we will see that he's receiving money from the corporation. So here's his salary from the corporation, and he's also receiving those capital dividends from the beginning, which are being limited by the amount in the capital dividend account, and then the total non-eligible dividends at retirement. So this is supplementing his personal income. It's actually allowing him to make some RSP contributions in the beginning years of his retirement. And then later on in the projections, we can see that he does not run into a shortfall any longer. And if we come to the final year, the estate before tax, we have his personal financial assets, real assets, and total assets. And then we have a line for the corporations. So if I hover my mouse over that, I can see the distributions that are going to him: capital dividends, non-eligible dividends, and eligible dividends, which is the same information that was available on the corporate planning page. See, the insurance proceeds are zero because that's relating to personal insurance. The corporate insurance was already taken care of in this value. And so finally, we'll take a look at the charts. There is some additional information available when you have a corporation in the plan. So if I come down to the cash inflow chart, we have both the non-eligible dividends and the capital dividends tracked for us. And in the net worth chart, we have information about the corporate net worth. And finally, we can go to the client report. I'll go back to the report builder because I'm going to disable my snapshots only filter. Now I can see the other pages that are included to do with the corporation. To view them, I can go to the report editor, scroll down to the bottom here, and here's my corporation cash flow projection. I also have the net worth projection for the corporation. I have a net worth statement for the corporation, and also insurance policies and details about that. And this concludes the overview of corporate planning in Snap Projections.